Hello everyone. This video is brought to you by the seventh monk. This is in continuation with the lecture series of CBSE Class 12th Macroeconomics. This is lecture 2 on national income and related aggregates. Here we would be continuing with whatever we had discussed in the first lecture. So in the first lecture we did macroeconomics, basic concepts in macroeconomics and the circular flow of income. Now we would be beginning with methods of calculating national income. In order to learn to calculate national income, first of all, you should have a good grasp over some technical concepts. So in this video, we will deal with those technical concepts only because once you will master them, believe me, solving the numericals of national income will become the play of your left hand. So stay tuned. And after this video, we would be doing all the three methods separately, and then we will do aggregates related to national income, and finally GDP and welfare. Remember that this video is a most important topic of the entire unit as it forms the base of your further things that we would be doing, especially numericals. That's why it is really very important. So let's get started. First of all, you should know that for earning income, there are two sources. One is work and other is property. People earn income through work, so higher the capacity of their work will be, more will be their income, and work is a main source of income in our country as most people do not own property. Without doing any work also, people can earn income if they are the owners of property like building, land, etc. They can earn rental income by hiring them on rent. Owners of mineral deposit can earn royalty by giving mining rights to contractor, and they can also earn royalty by copyright, patent right, trademarks, etc. Remember, rent plus royalty together form fixed assets. People can also earn income through paper claims like share, bonds, etc. And this income is called interest. Interest is called liquid asset, and fixed asset and liquid asset together are called capital, and the owners of these capitals are called capitalist. Now the next important concept is two types of income. Income is either factor income, which is earned by doing some work, or it is transfer income, which is received without doing any work, like gift. Since factor income is received by doing some work, doing some productive work, that's why it is an earning concept, and it is a bilateral income, and it is included in the calculation of national income. But transfer income is not included while calculating national income, as it is simply a receipt concept. No work is done for receiving it. These are just unilateral payment received by recipient without producing goods and services like gifts, grants, etc. So why they are not included in national income calculation. There is one important concept relating to it, that is pension. See, pension are of two types. One is pension to retired person and other one is old age pension. Pension to retired person is included while calculating national income as it is a factor payment. For this, the person has already rendered his services in past. Okay. Whereas old age pension is just given by government by seeing that old people cannot do some productive work. So for their sustenance, the government give old age pension. That's why it is not included, because no work is done for it and it is merely a transfer income. Now coming to the most important topic of this chapter, see, whatever is produced, it generates income, and income gives rise to expenditure, and expenditure in turn leads to more production. Expenditure is either on final investment or for final consumption. See, if production is of 100 crore, then income generated will also be 100 crore, and expenditure in turn will also be of 100 crore, right? And it in turn will lead to more production of 100 crore. Okay, so whether you calculate your national income by product or value added method, income method, or by expenditure method, your answer would be same. Okay, so there are basically three methods of calculating national income: product, income, and expenditure, and the national income calculated by all these methods would be same. Is that very clear? Now let's come to the main topic of our chapter, that is understanding what national income actually is. So See, national income is called NNP at factor cost in technical terms. Remember this, what it is, NNP at factor cost. Right? National income is nothing but it is a money value of all final goods and services that are produced by residents of a country while working both within or outside the domestic territory of a country. That is, while working in the whole world, okay? In an accounting year, and it also includes NFIA, because we are saying now within or outside the domestic territory, it means in any part of the world. So when residents are working in any part of the world and are earning money income, then we include the money income of all final goods and services while calculating national income, and we add NFIA to it. Finally, as a result of that, we get our national income. Now, in order to understand it very well, we will focus on each and every keyword so that we can strengthen our concepts, and at the end we can understand the definition of national income in a more clear cut way. Already I know that it is very clear to you because you already know what are final goods and services, but there are still some terms like domestic territory, residents, money value, NFIA that are new to you. So first we will do it. Now accounting year you already know. It starts with 1st of April and goes till 31st of March. That is the economic year. All that is clear to you, I guess. So let's start with money value. Okay, so see, various goods are in various units. For example, production of milk is in liter, wheat is in kilogram, and cloth is in meter. So to bring them on a common platform, we only consider the money value of all final goods and services, right? In order to remove this problem of different units, in order to bring them on a common platform. Now the definition further says that money value of all final goods and services. Now why only final goods? Why not intermediate goods? See, we had already discussed it, that if we will include the value of intermediate goods as well while calculating national income, then it would lead to the problem of double counting or the problem of overestimation of national income. So in order to avoid this problem of double counting, we only include the value of final goods and services. See, if we will add the value of all the intermediate as well as final good, then what will happen? Wheat is 10 plus wheat flour 20 plus bread 30, then it would be 60. So the value is overestimated because the value of wheat flour already contains the value of wheat in it, and the value of bread already contains the value of wheat flour in it, because they already include the value of raw materials that they are using for production. So in order to solve this problem of double counting, we either take the value of final goods only, that is the value of bread only, that is rupees 30, or else we include the value added by each enterprise at each level of production. For example, firm A is adding the value of rupees 10, firm B is adding the value of rupees 10, that is 20 minus 10 because it is selling wheat for 20, and its intermediate cost is of rupees 10. So when we subtract 20 from 10, we will get that the value added by firm B is 10, and firm C again is adding the value of rupees 10, that is 30 minus 20. So if we will add the value added at each step, then we will find that it is equivalent to 30. Okay, so either we take the value of final good or the value added at each step, it would come same. So in order to avoid this problem of double counting, we just take the value of final goods and services. Okay, in order to avoid the problem of double counting, which leads to overestimation of national income. Now the next important keyword is normal residents of a country. Now what does it mean by saying that a person is a normal resident? See, normal resident means that the stay of that person in the country should be more than a year, and interest of staying in that country should be economic, right? That means that the resident should carry out the basic economic activities of earning, spending, and accumulation from that location only. Is that clear? Now see, resident is different from citizen. Any person can have citizenship of a nation if he or she is born or they are allowed on some legal criteria, but in order to become a resident, their economic interest should lie in that territory and their stay should be of more than a year. And now, what are non-resident? See, non-resident is an individual who mainly resides in one region or jurisdiction but has interest in another region, okay, in the region where he she does not mainly reside. So he she would be classified by the government authorities as a non-resident. Is that clear? So now coming to the next important term, that is domestic territory. Till now I guess that the definition is clear to you. So let's move to the next important keyword, domestic territory. So domestic territory is the economic territory of the country, that is territory lying within the political boundaries including the sea territory. So all the places which are lying inside the map of India will be the part of India's domestic territory, and also the ship territory of India, sea territory of India. Ships and aircraft owned and operated by residents of the country between two or more countries will also be the part of India's domestic territory, like planes of Air India between Germany and USA. Fishing boats operated by Indian fishermen in international water of Indian Ocean are also the part of India's domestic territories. Embassies, military establishments are also part of India's domestic territory even though they are located abroad. So if there would be an American embassy in India, then it won't be the part of India's domestic territory, it will be the part of America's domestic territory. And if there would be an Indian embassy in Japan, then that would be the part of India's domestic territory. Is that clear? No matter in which country they are. But embassies, consulates and military establishment are always the part of domestic territory of the country. Right? Now coming to the next important concept, that is factor income from abroad. See, there are various services which are not available in India and we get those services from abroad. So in return of those services from abroad, we pay them factor income paid to abroad, okay. And also there are some services which are not present in any part of the world but they are there in India. So in return of those factor services to abroad, we get factor income received from abroad. So net factor income from abroad, NFIA, is nothing but the difference of factor income earned from abroad and factor income paid to abroad. So NFIA is factor income earned from abroad minus factor income paid to abroad. Whatever we are receiving from abroad, we are subtracting it to whatever we are paying to abroad. Then we get NFIA, that is net factor income from abroad. See, there are two important terms. One is domestic product and other is national product. See, domestic product is a product which is produced within the domestic territory of the country, okay, no matter whether a normal resident or a non-resident is producing it. And it does not include NFIA as it does not deal with the abroad, okay. But coming to the national product includes NFIA because it deals with abroad and it is produced in any part of the world by normal residents. So here the important condition is the resident should be normal no matter whether it is produced within the domestic territory or outside it. It doesn't matter, but the only thing that matter in case of national product is the resident should be normal, and in case of domestic product the only thing that matter is the territory should be domestic, okay. The name itself is reflecting it. So always remember that whenever you will reach from DP to NP, what you will do, see, domestic product does not include net factor income from abroad, but national product includes net factor income from abroad. So whenever you have to come from domestic product to national product, you will just add NFIA, that is net factor income from abroad. And whenever you have to go from NP to DP, then just subtract NFIA because domestic product does not deal with the foreign sector, so they will not include net factor income from abroad, but national product deals with it, okay. So while going from national product to domestic product, just subtract NFIA. So if there is a question given to you that find GNP at market price from GDP at market price, so simply what you have to do, you have to add NFIA for reaching from DP to NP. Is that clear? Now there is one more very important concept, because I told you in the beginning that national income is an NP at factor cost. Now, what is this factor cost? What is this market price? In order to know that, you should know the concept of net indirect tax. See, net indirect tax, NIT, is nothing but the difference between IT, that is indirect tax, and S, that is subsidies. So the difference between indirect taxes and subsidies is called net indirect tax. Now, what are these indirect tax? These are the taxes imposed by government on production and sales of goods and services, okay, like GST. And what are subsidies? Subsidies are financial assistance given by the government to an enterprise on the production of certain commodities if they are beneficial for the society. For example, LPG, as it reduces pollution, fertilizers, as they were important at the time of green revolution, etc. So when you will subtract indirect tax from subsidy, you will get net indirect tax. Now always remember that factor cost does not include net indirect tax because it is the amount paid to factors of production for their contribution in the production process, and income does not include indirect taxes. Whereas market price include net indirect tax, right? Why it includes net indirect tax? Because goods have taxes, indirect taxes on them, okay? So whenever you have to move from market price to factor cost, just subtract net indirect tax, and whenever you have to move from factor cost to market price, just add net indirect tax. So if there is a question that you have to get G and GNP at factor cost from GNP at market price, then what you will do? You just will subtract NIT, because FC does not have NIT but MP has NIT in it, okay? Now see, this is another concept. Whenever we move from gross to net, we will subtract depreciation, and whenever we will move from net to gross, we will add depreciation. Is that clear? This concept has been already discussed in past lecture as well, because gross contain depreciation and net does not contain depreciation. So while moving from gross to net, we subtract depreciation, and while moving from net to gross, we just add depreciation. Now this is the most important concept of your entire unit, that is NDP at factor cost. See, if you know any one aggregate, then you can find all the other aggregates, because you know how to move from net to gross, how to move from DP, domestic product, to national product, how to move from FC, that is factor cost, to market price. This is what you know very well, right? So if you know how to calculate NDP at factor cost, you can find all the related aggregates in a very easy way, okay? So let's see what are the components of NDP at factor cost. So NDP at factor cost includes compensation of employees, operating surplus, and mixed income of self-employed. See, what are the components of compensation of employees? Compensation of employees means the income from work. I told you na, the two sources of work, the two sources of income, it can be earned either from work or it can be earned from property. So compensation of employee is the income from work, that is wage income. It includes wages and salaries in both cash and kind. It includes employer's contribution to social security scheme like insurance done by the employer, okay? And it also includes private pension, that is pension to retired person, because a person had already done work for it, right? So these are the part of compensation of employees. Now by saying both in cash and kind, what does I mean? I mean that their salaries, that is cash, and kind mean the quarters or any other facilities that are provided to employees in lieu of the work that they are providing. The next important component is operating surplus. It basically includes the income from property and the income from entrepreneurship, okay? It includes income from property in the form of rent, interest, and royalty that we had already discussed, and it also includes income from entrepreneurship in the form of profit. Now profit is of three types: dividends, corporation tax, and retained earning. See, what are dividend? Dividend is that part of tax, that part of profit which is given to the shareholder, okay? Suppose a factory owner has only 10,000 crore rupees and he needs 15,000 crore rupees for his investment. So what he will do, he will make share of the rest amount for establishing his investment, and the people will buy that share. On the basis of the proportion of share that they are buying, they will get the profit. So that part of profit is dividend. And corporation tax is a tax that government is imposing on the profit earned by firms. And retained earning finally is undistributed profit that the firm is keeping with itself for repairing its instruments, repairing its machine, for painting, and for maintaining the production activity. Okay. Now, so it is very clear to you that operating surplus is non-wage income. Okay. And mixed income of self-employed includes wage income as well as non-wage income. Okay. So it includes all the miscellaneous thing. Now let's conclude this video by looking at how we can convert one aggregate into a totally different aggregate. So let's see how you can get an NP at factor cost from GDP at market price. So it's very easy. First of all, see here that in order to move from G to N, what you will do? See, G, that is gross, contains depreciation, but N, net, does not contain depreciation. So for moving from G to N, what you will do? You will just subtract depreciation. Okay. Now in order to move from domestic product to national product, what you will do? You will add NFIA, because national product contains NFIA and domestic products do not contain NFIA. So what you will do? Just add NFIA to it, right? And now in order to move from market price to factor cost, what you will do? See, market price has NIT but FC does not have NIT, so you will just subtract net indirect tax from it. So here I hope that this is clear to you, that how can you reach at a totally different aggregate by knowing any one. You know that how to reach from G to N, how to reach from DP to NP, how to reach from market price to factor cost. So all the aggregates like GDP at market price, GDP at factor cost, NDP at market price, NDP at factor cost, NNP at market price, NNP at factor cost, all the aggregates can be reached if you know any one aggregate. Okay. So that's all for this video. Please revise it once more and practice the questions that are given in the description so that you can strengthen your basic technical concepts.